This is the true story
True story.
of real questions
I mean it!
from real people who are just trying to figure out what happens when real estate professionals stop being polite
Can you get my phone?
and start being real.
Real talk.
Tuesdays at 2 on Blanchette Homes. Hello and welcome back to another edition of Real Talk. I'm your host, Matt Blanchette, joined today by Brian Andler of Movement Mortgage. Hi, Brian.
Hey Matt, how are you?
I'm doing fantastic. Brian, we always love having you here. We know you've been in the business for 25 years, and I love the way that you treat our clients. I love your knowledge of the market, and Movement has some great programs. Last time we spoke about predictions for interest rates. We heard that the Fed is going to be making some cuts. We should have good reason to believe that we'll be down in the sixes by the end of Q1, Q2 this year. And that brought some follow-up questions. So for buyers at home, they're asking, should we be considering an adjustable rate mortgage? People need to be in a new house or they need to buy despite whatever the mortgage interest rates are. So what are some alternatives such as an ARM or a buy down program?
Sure. So you do have adjustable rate mortgages, and those give you a fixed rate for the first 5, 7, or 10 years, which is usually lower than a 30-year fixed. That buys you some time to play the market, and when rates do come down, the fixed rates come down, you can refinance into one of those lower rates.
So if I understand this, they start with the market rate, and then they're going, because we're predicting the Feds are cutting the rates anyways, it's a good time to consider an ARM because they could be trending lower anyways.
Correct.
Okay.
And it will give you a lower payment until you are into a fixed rate.
Understood.
There's also the buy down program.
Okay, what's that?
Well, for first time home buyers, you can do a 1 or 2 buy down, which basically lowers your payments by 1% of the interest rate or 2% of the interest rate for the first 12 to 24 months.
Okay.
Now that does cost money. You do have to pay points for it, but you always look at your return on investment. If it's going to get you to the point where fixed rates are lower and you can get into a 30-year fixed rate, makes the house much more affordable for you in the first 12 to 24 months.
Very interesting. So I know that we always like to consider, what are we leaving our clients with after they're in the house and they've bought the new property? We certainly want you to be buying a house within your budget, and it sounds like the buy down program can make sure that those monthly mortgage payments are something you can handle, and you're not getting into something that's overwhelming. So a few other options Brian has. I know we can't cover everything in a 2-minute video, but thank you for joining us for this episode of Real Talk. We'll see you next time.